what is it that is driving the selling and the sentiment lower? Because we all thought the administration's adoption of crypto in many ways would just continue the asset class's rise.
Yeah, exactly. I think what we're seeing today in the crypto market is that it's still recovering from what happened in October, where we saw this large liquidation event happen in the crypto. If you look at like both institutional and retail investors, we haven't seen any large firms coming out saying they had any blow up and stuff like that. But it does feel like some trading shops, smaller ones, might have some issues. You can see that from the open interest of perpetual futures market in crypto. The open interest hasn't really recovered since the market crashed in October. That tells me something about some trading shops may have had issues. Yeah.
I mean, remind us what happened. It was October the 19th, I think. It was over the course of a weekend, just an awful lot of leverage got pulled out of the system because a sudden jarring move in crypto meant everyone then had to sort of, well, they were margin called, it would feel like.
Yes.
Why would we not have heard of certain blow-ups? Or what could have therefore been more broadly making everyone more nervous about trading this going forward?
I think we saw the number, obviously, is one of the larger liquidation numbers ever in history. I think there are a couple of reasons playing into that. Obviously, retailers are looking more leverage in the space. That's why we're seeing more sort of liquidations events. The other thing, I think, previously, most of futures tradings are happening on centralized exchanges like Binance and Coinbase, right? So you can't really tell. Sometimes these numbers are more like murky. You don't know exactly what happens when large liquidation events happen. But today, a lot of these tradings happens on chain, on the blockchain directly, so there's more transparency, so the numbers tend to look much bigger than previous cycles.
I think we're looking at certain ETF flows. They've been more than 50 billion since their creation, but we've seen about 2 billion pulled out in the last couple of months. Where are we feeling the most pain? Is it in Bitcoin? Is it the larger areas? Or is it some of the more, well, certainly riskier core altcoins that have been traded and whipsawed a little harder?
I think for sure from an altcoins perspective, because you can see that from the prices action, right? Like you mentioned about Dogecoin, not just Dogecoin, other like cryptocurrencies during the market crash in October, some tokens went down to almost zero, which is crazy to think about, right? I think that hurts especially retail investors, because retail investors are those who tend to buy a lot of altcoins, and they got wiped out from that market crash, and right now you just don't see a lot of demand from these altcoins.
But people are still buying. Like we just had Jay Jacobs and BlackRock saying for many, a pullback in certain of their ETFs means people actually buy into it. I'm seeing Michael Saylor, I mean, obviously OG crypto buyer and treasury stocker upper of, he's doubled down on his digital asset treasury, it feels like. So is he making the most of lower Bitcoin prices?
I think it's two different stories, right? We're talking about the MicroStrategy, Michael Saylor's like Bitcoin sort of like buyers, and then we have the altcoin buyers. I think that we need to separate these two as two like driving forces. I think on the Bitcoin side, because fundamentally speaking, nothing really changed on Bitcoin specifically, so there are still buyers. But I think what's happened in the market has been like sort of like got into the Bitcoin market as well. That's where we're seeing what's happening with Bitcoin. I think that's like sort of the aftermath of what happened with altcoin crashes and the October market crash, etc.